Oh, to record. Oh yeah, true. Um, so yeah, I was gonna say the reason why it works. Well, okay. So first of all, I'll show you how it forms. Um, because obviously you can understand the concept, but you want to see how it's forming and how to see them on the chart. And
Yeah.
basically,
Also, you can use this. You use this on a daily basis, right? When you're trading to see when to buy and when to sell and
yeah,
when to.
exactly. That's all I trade actually. Supply and demand. I mean, you can draw them on your chart,
Uh,
and basically this is the where. I'll go more in details about this further in the lesson, but like your supply and demand zones are basically the where you want to trade, and then price action, volume analysis. This is the why and when you take a trade, and I'll go more in details.
how would you be able to tell? How would you be able to make a prediction on what your price target would want to be based on where you're buying? So, like you were talking about with supply and demand, like how would you know how far it's gonna
Go in the
rise?
zone.
Yeah, like how would you be able to how would you be able to like know that? Like,
Okay, so how a market works in general is that it will move from demand to supply and to supply from supply to demand. But unfortunately, that's not how it always works. Um, just because the market is the market, and if it would always move like that, it would just be too easy. And also, when it comes to conditions like that, like in the past weeks when we had the VIX that was at 30, this is when volatility is it super crazy, and um, so you don't always want to have, like, let's say you're buying on the demand zone, you don't always want to have a target of the next supply zone, for example. There's a bunch of reason to there's a bunch of way to set your targets, and I'll go over that later in the lesson. But it all depends on the current market context. But targets I like to use are VWAP, um, volume profile POC, which are these yellow line here, next supply, or in some cases when the market conditions aren't that great, I just scalp, for example, 3 or 4 candles on the 1 minute, and that's it. But I'll go more in details about this. So, and actually, I'll go over how to spot them on the chart. I forgot I had a slice for that. So, what's the difference between a balanced market and an imbalanced market? Um, an imbalanced market is usually when supply is higher than demand, or demand is higher than supply. Um, so I just want to show you what I'm talking about here. If we can go, let me see, ES, got the 1 hour. So this morning we had two zones, right? We had this demand zone here, and we had this supply zone. This is all this choppiness here. This is what I call a balanced market. We're just trading in the middle of nothing. This is also what you can call the noise. You don't want to be trading in that balanced market. You want to be trading in the imbalanced market, which would be that demand zone here or that supply zone here. Um, so if I could, yeah, pull it up again. So yeah, again, when supply is higher than demand, this is when we form a new zone. This is when price will decrease. On the other side, when demand is higher than supply, price will increase. But again, you need to understand that you won't be able to predict when that will happen. So you don't want to be trading um, uh, the the creation of these zones. You want to trade the retest, and then I'll go again. I'll go further in details. And again, so yeah, balanced market. I showed you what it is. Um, and yeah, you don't want to take any trades. Now, who moves the stock market? Who creates these zones? So it's all institutions. First of all, firms, hedge funds, mutual funds, banks can also be I would say like individual traders which have a big port, but that's an exception. Yeah, so in general, anyone that's trading with a large amount of money that can actually influence the stock's direction, um, these are the one that we're going to move the market, because, and this is why I'm saying right here, this choppiness, um, this can be anyone trading this, but these zones that are creating with that amount of volume, these are not retail traders. These are institutions that are moving the price here. And the way that they're creating the zones is that they will leverage their positions. And this is why, if I can show you that zone I had on the 30-minute, so this is what I call the drop, base drop. This is the pattern we're looking for when it comes to supply zone, or would be the other way around for demand zone. What happens here is that you have a drop, and then you have a consolidation for a certain amount of time, depending on the time frame. In this case, it's a 30-minute time frame. So if we go, let's say on the 15-minute, or maybe like the 5-minute, you can see that we have some sort of consolidation here for a while, and this is what I call, I mean, what everyone's called institutions that are leveraging their positions, meaning that they will buy shares with multiple small orders without moving the market too far away. And then at one point, they will place a bigger order that would, and this one will actually move the market. And this is when here, this is when you'll have that second drop here. Now, coming to, I think it was Viper's question, how do we trade these zones? So again, you can't predict how, you can predict when these zones are going to be created. So this is why once they're created, you chart them on your, I mean, you draw them on your chart, and then you wait for a retest. And the reason why it works is because whenever they fill their last order at a certain price, not all of their orders are going to be filled, and they're still going to have some limit orders waiting for the price to come back into these zones. And I can give you some example of today's action. If I go on my, I can go on the 1 minute, I guess. I'll start by showing you the zones. So I already showed you the, this is the supply zone I had, 30-minute supply right here. I said used. As you can see here, I said 30-minute used just because it was used in the pre-market here. And then here I had a 90-minute. So if I go on the 90-minute, this is what I had. So we have a rally, base, rally. So this is the zone I had. Now, if you go on smaller time frame, so obviously, when you're trading intraday, you want to be on smaller time frames, and this is actually my trading setup. I have the 1 minute, the 5-minute, 15, 30, and 1 hour. I would say 1 hour, 30-minute or more, just to give me more insight on the market and what it's doing on higher time frame. I usually look for my entries on the 1 minute and 5-minute, depending on if I want to scalp or day trade, even the 15-minute sometime when it comes to bigger day trades. But if we want to look at today's action and how to trade it, I would not, the reason why I would not trade a demand zone right now is, again, because of market context. If you look at the 4-hour, we can obviously see that we were in an uptrend since we hit these lows back a couple of weeks ago. And then while we were in this down uptrend, all we wanted to do is buy the dips and not sell, try to sell the top. So this meaning that we want to buy in demand zones and sell in supply. But right here, we can we can see that we broke the uptrend and we're now in a downtrend. So this is when you want to short supply and you want to take profits in demand, but you don't want to go long in demand, just so you have all the chances in your favor. So how I would have played it here, obviously you can scalp this. You can definitely scalp this, um, but I rather wait for the better setup, which is the test of that supply zone. And the way you want to go about it is right here when you have that test. Obviously, it's not going to be like that every single time. And I think the next slice is about the confirmations. But for this right here, my stop loss would be right above that wick. I would take position on the close of that candle here. And my price target would be, first of all, my level here. I have a key level. And I was going to see VWAP, which is on my charts here. So I would have VWAP here. And the reason why I'm stating a bunch of more than one price target is because you can scale out and trim profits. So right here, the VWAP and my level are at the same place, which I would either sell my whole position there because you don't have to day trade. You can obviously just scalp these, or you can trim and hold some, and your final price target would be demand zone. Now, obviously, we did go lower, but you can't just sell the high and take profit at the low. That, you mean, there's really no way to predict that in the market. So again, it's hard to predict these areas, but easier to trade them on a retest, which is what I do. We use confirmation. Again, these zones are the where you want to trade, and price action, volume, are the why and when. Yeah, again, retails bring liquidity to institutions because I'm sure a bunch of you guys plays breakouts, which is totally fine. But when it comes to playing supply and demand, we usually, institutions usually use retail's breakouts liquidity to fill their orders. So they will fake out the retails to get more fills, more better fills. In this case, that didn't happen. But sometimes what you'll see is that you'll see price go in the zone, and you guys probably see this a bunch of time. I know a bunch of you guys are probably trying to play a high of day breakout or a low of day breakout. What will happen is that, let's say price, I can't draw it here. Let's say price goes in here, then it pulls back, comes back here. It will break above on the 1 minute, and then it comes all the way down. And this is what we call a breakout, and this is what institutions do to manipulate the market and use retail's liquidity to have better fills. So we go over this, I think on the next slides. Yeah, I talked about this, how to identify them. So demand zones, we're looking for either a rally-based rally or a RBR or a drop-based rally, DBR. So this is an example of a rally. You have this big green candle base and then another rally. And on the other side, there's a drop base rally. Again, the reason why these are the patterns you're looking for is because this is a rally caused by institutions. Then this is them leveraging in their position. And this is them then causing the other rally. So what you're pretending here is that there is still orders sitting there and waiting for the price to retest and then fill and then push the price back up again. On the other side, supply zone, drop base rally, which is basically the other way around of demand zones, and rally base drop right here. Oh shit, I think I just skipped someone. I just skipped something. How do I go back? Okay. So my confirmation, if we look at today's example, that was so either a pin bar or a doji candle. In this case, that was a pin bar This is usually when the price goes up and comes back down and close. You have this long wick up, and for the demand zone would be the other way around. So the wick would be below. Quick in and out, which kind of happened today, I would say. Yeah, in my demand zone here, quick in, quick out. It's just there's just no name to this. It's just the price going in and immediately the orders are getting filled, which you can confirm with look at this volume spike here. Can confirm this with volume. Also times in sales. So high, let's say for supply, lower high or a trend reversal. So what I like to see sometimes, which we didn't get today, but we will have price, let's say in demand zone here, come down in demand zone, then go back up, and then it will retest here, make a lower high, and then you can take a trade risking off previous low. These are great indication as well. Minor confirmation, double bottom in demand, double top in supply, breakout, fake out, which is what I was talking about earlier. So any type of confluence that I can have, let's say I'm trading ES today, and what I do have on my chart, let me try to pull it out. What I do have, so I have all my zones here. I mean, sorry, my time frames, and I have NQ on the left. So what I will do is that I'll have my zones on NQ as well, and I'll use NQ and the VIX as confluence, meaning if NQ is in demand as well as ES, this is a good confluence for me to be bullish, just because both the Nasdaq and the S&P are in demand zone. And I forgot to mention, but those who don't know what ES and NQ are, ES is the futures of the S&P, meaning that it's going to be the same thing as SPY, and NQ on the other side is the futures of the Nasdaq, which is going to be the same chart as QQQ. Now I'll go over why I trade ES. I chart ES and not SPY. I still do trade options on SPY though, and I'll explain you why. The red flags, lower low in demand, that shows us this weakness. So obviously we saw this today. We had this demand zone, and we made a lower low. We had a low here, lower low. So obviously you don't want to trade this. Same thing for a higher high in supply. A basing candle or just consolidation in your zone. This is just showing, for example, in supply, it's just showing us that buyers are accepting higher price, which, it could reverse and still be a good trade, but it's not as good as any other confirmation we could have. So obviously you don't want to see selling volume in demand or buying volume in supply. I think someone was going to talk. Chris, no? Okay. And again, slice through. If you just don't see any reversal, like right here, it just slides through. That's another sign that you don't want to get in. Or overall downtrend or uptrend for supply. Again, exactly what I was saying. If on higher time frame, I'm trying to pull it up here. If on higher time frame you're in an uptrend, there's no reason for you to try and play shorts in supply. You're better off waiting for a bounce in demand, and the other way around for supply zones.
Hey, Vincent, sorry to interrupt you. Vina here. So,
yep.
For example, like today morning when market opened 9:30, you see that it's so much bullish, even all green candles where you are showing right now. And suppose if we enter based on 15 minutes or even 30 minutes, even still 9:30 to even 10:15, it was bullish. And suppose based on the entry, like let us say if you enter 10:15, but where you see that 10:25 started reverse, all the way it come down quickly. So how do we get conviction that whether to enter or it's a kind of fake breakout, and where it may come down quickly. So today's is the best example. If you can give more elaborate on that, how do we avoid the fake breakout entries?
So you mean today if you would have got into long here?
Yeah, yeah.
Well, okay, so this is something I would never do. Um, and again, first of all, I said I wouldn't even get long in my demand zone, so I would obviously not get long right here. And to help you, whenever you get into a trade, ask yourself, why am I getting in? What's my plan? Where do I sell for a loss? And why do I sell for a loss? Because I know some people like to have a hard stop loss of 10%, 15%. Um, Personally, I like to base my stop losses on my technical analysis. So again, like I said here, let's say I get short here. I want my stop loss to be over that week. I don't care if it's 5%, 10%, 15%. Obviously, it's not going to be more than 15% because I buy contracts that I know won't be more than a 15% loss, just because like if my stop is wide, I'm gonna buy a further expiration contract. But to answer your question, I mean, this is why we have supply and demand zones, to give us context and to not make the mistake to go long on high of day. Um, so I mean, I'm not sure if your question was like if you have a level and you're trying to play a breakout. Um,
Yeah, so the only thing which I'm trying to understand, like if you are a day trader, so you may stick to either 15 minutes, 30 minutes, an hour. Like based on that, we make entry and exits. But today's example is the best one where we can consider, like based on the fact 9:30 to 10:15, it's a super bullish. Even nobody
yeah,
can uh, guess that it will come down quickly the way it gone down today.
yeah.
So yeah, these are the ones most of the times we trap. Like even though you put stop loss, it will trigger like within no time. So even whatever 10 points, 20 points, even yes, for example, like it will do that, but how do we avoid that entry itself? That's what my question actually.
So Vinay, Cloudy, let me ask something that can relate to the trade, right? So Vinay, your question is trying to are you trying to base your question based on a swing, based on a day trade, or based on an investment? What kind of a question is this? So
Based on day trade, like the one cloud is showing that futures yes example. So
Yes.
in this
So, so,
case,
so,
if
so
yeah.
Cloudy, see, as per Cloudy, right? So he gave two major points if you had joined earlier in this call, right? So what he was trying to tell is, I would never ever try to go and trade during the supply zone, right? So that's what he was trying to tell, right, Cloudy? Like did you cover that?
Yeah, so basically, this is basically why I think everyone, even if you're not trading supply and demand zones, let's say you're playing breakouts, which is totally fine. Breakouts is a great strategy.
Right.
Um, but I think every single trader should have a minimum knowledge of what the current market structure is.
So
And
would you mind, Claudia, would you mind getting onto a 30-minute chat for me, please? I can probably explain a couple of points on that, on the breakout, right? So how to take a confirmation, or you can also cover on that, like if you're
no,
trying
you
to.
can you can go ahead.
Yeah. So Vinay, like on the time, right? Like even on the day trading. So if you had planned your day trading, right? If you had planned it around like 9:30, then definitely yes. By the time it moved to the 4586 or 4588 levels, right? You could have definitely got out, right? So that is like almost 20 points there. So even if you want to test first candle and second candle and third candle, even there you had the uptrend there, and you would have made the profits. So any day trader or scalper, right? Like they will not day trade more than 2 or 3 candlesticks. I can probably pull the chart from my side and I can show you. Let me share my screen for a minute.
Yeah, I have to stop sharing.
Yeah, let me do that.
Sorry for that, Cloudy. Like if you plan to do something, but even if you want to continue, and at the end you can cover. I'm not sure.
Oh, there's no
If you
problem. I
have
mean, this is
planned
why we have
something and
lessons.
where Yeah.
This is this is the whole point of having lessons for you guys to ask questions as well. This is like asking questions is the best way
the
to
reason
learn.
being, the one which you picked up and exactly coincidentally it happened today, the way it, just did false breakout and,
Yeah.
come down quickly within no time. So that's
Right.
what
So that's what it is, right? So what Cloudy is sharing is based on 1 minute chart, right? Let me share my screen, and I would always take confirmation on the higher timeline too. So that's what I was trying to
Of course.
explain earlier. So where is my screen? Share screen. Let me know if you're able to see, Vinay.
Yeah, it's still loading. Yeah, I'm able to see now.
Yeah, so if you look at triple Q, right? I mean, let me talk about triple Q because rather going into futures, right? Let's talk about this. So if you see, this is
Yeah,
the
you can
15
take
minute.
SPX in that case, like, as
Okay, yeah,
Cloudy
yeah,
is
sure. Right,
referring to
right.
Yeah.
Yes, even with SPY, right? So
Yeah.
if you look at this one, it never made higher highs. See, if you look at it, right? So today's higher highs is somewhere here. Okay, so you can always take that confirmation and okay.
Wait, was that today?
No, definitely not. Yeah.
Sure. Okay, I'm sorry about that.
No, that's fine. Because today you can see the same green there. If it is
Right.
SPX or
Right.
Yeah, that was there. Okay.
Sure. So if you look at it, right, if you really see, this is the only candle that went up, right? And after that, it is almost like consolidating. I wouldn't see any stronger confirmation here. So if it was me, what I would be doing is I would be seeing like at least 2 to 3 candle confirmations before I go up, right? So if you go back to 5 minutes, right? So what would you be anticipating on a 5-minute chart? Oh, yeah. See here. I mean, I for sure don't see at least second to third candle follow up in any of these trends, Vinay. So that's what I would take as a confirmation, right? Yeah.
Chanu, I'm not sure. Like SPY or SPX today, 9:30 to at least 10:10. So it was all green. So
if you see this, no, so this is what, sorry, if this is today's and it is 5 minutes chart, right? What I saw is like this is where it went up, and after that, if you look at these candlesticks, right? See, they are not really very strong. And this is today's chart. Okay. See, it's all like after hours and it is today's chart. I can probably do auto zoom and show you. See, here you go. Right? So I mean, those are certain things. I mean, definitely if you go to a 1 minute, like you might have a different view altogether. See, on 1 minute, probably you will see like it went up like this, right? So here. So this is the same thing that Cloudy was trying to show. On 1 minute timeline, definitely yes, like it showed bullish, but if you're trying to scalp, like at least you need to take confirmation on 5 minutes and 15 minutes before you go further. So that's about it.
For scalping, so what would be the best one to go? 5 minutes?
No, so 5 minutes, 15 minutes, 30 minutes, right? See, because unless you go to 5 minutes or 15 minutes, you will definitely not get a confirmation, especially on the candlesticks. Like on 1 minute, it can be bullish, but in 1 minute, how much trade can you do? That's what I'm asking, right? So if you are really a quick scalper and if you have a 0 DT that day, and if you're trying to play 0 DT options, then probably on a 1 minute chart, you can take a confirmation on 3 or 4 candles and you can move out. But if you're really going and doing a scalping on a stock or on SPY, right? And if you're trying to buy like next window options, like if you're trying to buy the one that expires tomorrow or the following day, right, then it's not going to work out for sure, because you will have delta moving so low, so and you might not get the returns that you're looking at. But if you're looking at like 1%, 2%, then definitely you can do that. So that's the reason why I follow the strat method. So the strat method basically gives you confirmation on the trends, and it will also tell you whether it's going to be bullish or not. So all those things are really good with the strat. So we can probably cover these sessions, these things in different sessions, but this is how it is. Look at this.
Yeah. Thanks, Chano and Cloudy. Yeah.
Yeah,
Continue.
Yeah. Take it up, Cloudy.
Yeah, you have to stop sharing.
Yeah.
All right. Let me see. I don't have the right now to share because I need to be host.
Right. Let me do that.
But I mean, basically, the whole point of that is just try not to go long when the market is extended like that. Obviously, that was a huge move on the upside. And okay, can you see my screen? Yeah.
Yeah, we can see your screen.
Okay, cool. And also, what you can do, hold on, I'm trying to pull it up. In the server, there's I have a channel where every morning I post my zones right here. So obviously you can use this as reference to be like, okay, so there's just supplies on there, maybe I shouldn't go long. So again, this is all confirmations you can get. But yeah, going ahead with the lesson, that was pretty much it for the red flags. Again, yeah, why do I chart ES and NQ? I get this question a lot. I would say it's basically because of liquidity. Obviously, I could chart SPY and QQQ, but the big difference is for the aftermarket, extended hours, overnight sessions. There's way more volatility in volume, and I can show you the example. I just want to go here. Let's say I pull up SPY here on the, let's say, 5-minute. So that yesterday's session overnight on SPY, then right here on ES, that's the session. So if you look at SPY here, you'll see there's a bunch of gaps. There's a bunch of like white lines, which are small body, and the reason for that is that there's no volume. Obviously, there's not a lot of volume on ES, but there's way more volume than on SPY. And what that does is that it's just harder for me to spot zones and levels on that type of action, because again,
yeah, that's right. So after
look
market,
at these
right?
gaps here. So this is basically why I trade futures. I mean, I chart futures. I used to only trade options on SPY while trading futures. Now I'm getting into trading futures. That's a whole different subject. Also, they're nearly open 24/7. They close at 5 p.m. and reopen at 6, so they're only closed 1 hour per day, which is why they have more volume. Gives us an overall view on the market, even if you're not trading SPY and QQQ. Let's say you're trading equities like AMD, Facebook, just charting them and getting more context on the market, and if the market is bullish or bearish, will help you just add confluence to your strategy. Also, another reason why I chart these is for the daily candles. Again, if I show you the example here, I go on the daily and daily here as well. Why am I so far away? Same thing here. So you'll notice that on the daily, since the futures are open 24, I mean, well, not 24/7, but 23 hours a day, the price action on futures is way more clean on the daily chart as well. There's no gaps and everything. So that's another reason why, because obviously I do chart supply and demand zones on the daily as well. Yeah, I can go over VIX, I guess. I well, to be honest, when I created this PowerPoint like a couple of weeks ago, I was big into VIX. Now I look at it as reference a little bit, but not that much since it's back to its 2025 levels. Like right now, I think it's it's at 22, 23. The reason why I was looking a lot at it before is simply because it was really high at like 30 something. But basically, what the VIX is it's a fear gauge. It gives us an insight into the feelings of the market. If people are scared, if people are hedging their positions, and how it works is let's say Gary, right? Gary is a long-term investor, and he thinks that the market going down. He, 2 weeks ago, he was hearing about. Actually, it's more like a month ago. He was hearing about inflation rates, Ukraine war, new variant on COVID. So he thought, you know what, I'll edge my position, my port. What he can do is that he can buy options contracts, puts to hedge his position, which is what a bunch of investor does. And what that does is that so basically the VIX is just telling you there's a lot of people buying, edging their portfolio right now with options. And this is why also, I don't know if you guys tried a lot of options, but 2 weeks ago, when the market was down and the VIX was around 30, you probably noticed that the option contracts were way at a higher price. Is like 0-day SPY contracts are usually $50. Now they were like $1. So this is the kind of change you can see. So yeah, basically more fear. The VIX price will increase. That's basically it. And I was using it as confluence with supply and demand. I'm also charting it. Is it actually the conclusion already? So yeah, in conclusion, the reason why I wanted to go over that is because this is something anyone can use in their trading, whatever strategy you're using. So you don't have to be trading my strategy or anyone's strategy. The whole point to day trading is that everyone has their own strategy, everyone has their own rules, and the more rules you add to your strategy, the better it will be. And yeah, so I gave an example here. Let's say you're a breakout trader. One of your rules would be to, and I have one of my friend is a really good breakout trader, and he will chart supply and demand even though he's not trading them, just to avoid trading longs in supply in short in demand. So these are the kind of rules you can add. And again, you are, even though you're right here in a Discord server with a bunch of analysts, I would say, that are experienced, you're still your own coach. If you want to be able to have to build up your own strategy and be consistent, you need to put in the time, put in the work. The most important thing when it comes to learning how to trade is screen time. You have to spend a lot of time looking at the market when it's open, when it's closed. You can use TOS. Use the on-demand feature, which allows you to go back in time and trade whenever you want. You could literally go back to 9:30 this morning and trade like it was happening in real time. So from there, I mean, I can answer questions. And I mean, if someone has question, like I don't remember who was asking about the breakouts earlier, but you can also send me setups in DMs whenever you want. Send me your trades you took, and I can review them, give you advice, anything. My DMs are obviously always open.
Sure, Cloudy. This is Vinay. So I appreciate for that. And one last question, like I do even futures as well. Like as you mentioned, I love doing futures than even the regular trading. Definitely. Even do you post anything for futures on daily basis?
If I post like on my bot,
Yeah, any bot or anything within our group, even where you post even something related to futures, anything specific
this is what I
features?
post on my bot actually. Like the bot I had in the server here. Right here. So let's say this morning I said pre-market analysis, ESA ranging between supply. When I say ranging, this basically was what I was talking about earlier when I talk about balanced market. So right here we had like the balanced market. We were waiting for that test here, which happened, and then we had the bounce. So you can read this here, and this is futures. This is the ES chart. Now, obviously, the reason why I don't like to, I would say, alert like my entries and everything is just because actually it's not. I'm like when I'm way too focused on my trade that I just can't send my entry. And also right now, I might do it like in the future, in May. But right now, I'm kind of like in the middle of my internship. I'm finishing my studies, but after that, I'll be full-time day trading, so that will be way easier for me. But this is basically what I post.
Okay, sounds good. Thank you.
Of course. I mean, if you guys wanted to ask questions you can ask questions in the trading chat as well in the Discord server if you want. I think someone wanted you to talk about the Fed, right?
Yeah, so
Yeah.
it was Viper, right? So
yeah, that was me.
yeah, so two things, Viper. So I mean, compared to equities, stocks, or any other trade, futures, whatever it is, right? Always investors have a safe haven on bonds. So if the bonds are moving quick, right, and if the bond prices are moving up, they will feel it's safe to invest in bonds. Especially look at today, bonds moved around like 5%, and what more than 5% you want on a day, right? Especially if you're investing huge. So that's why the value stocks gets affected. So whenever the bonds move up, you can see Nasdaq or Triple Q or any stocks related to tech, these things go down because those are considered as the value stocks, at least in this era. And most of the times when we are trying to buy the bonds and the bond prices goes, the first thing that goes down is Nasdaq, and so that was one of the points. And especially with the inflation and the tax hikes from the Feds, right? So the people want to be on the safer zone. So that's why these 10-year bonds, 20-year bonds, 30-year bonds are moving up, and they're trying to move all their funds into these bonds and be safer than being on the equity side. So that is one of the reasons why we can see, like, whenever Fed comes up and says like we are going to increase the 50 point basis or 25 point basis, then we can see these things happening, and that is pretty common. And I believe like I have answered your question. So that's what your question, right? What
Oh yeah.
happens? And especially if you're a day trader, right? You don't worry about any direction, but definitely we all will have investments, and we have to protect our investments. So the one thing that we always recommend is like whenever there is some market news or something that is coming up, then try either to hedge your positions or not to trade heavily. Try to have as much as cash in hand. So whenever these kind of uses occur, like I try to post them in our group also, and I'll be posting the events for the following week and all that. So the other thing that is always good to follow is following futures before market and after market whenever you get time and get an idea. And also, I think I covered in the last session about having a daily watch list on the sectors and identify which sectors are moving that day and try to trade based on those sectors. So that is one other key thing that you can do if you want to be a good trader, right? And if you want to trade specifically on equities. Okay.
Yep.
Yeah. So, any other questions for Cloudy or me? We still have 6 minutes left. Happy to answer.
I'm literally charting my zones for tomorrow right now, so that you know, that's a decent example of how I do it.
So there was one other question. Somebody pinged me asking like, what is the study? And I was telling them it's Cloudy study. Like he draws all these levels by himself. So.
Wait, what?
Claudia,
Where's the question?
I have a question. Did you go to a university to learn all of this, or is this just like you on like your free time learning about this?
No, it's just no, I'm actually, so the internship I was talking about is in cybersecurity actually.
So do you do this more of like a hobby, or this is gonna be your full-time job?
No. After my internship is done in May, which is May 6th, I'll be full-time trading.
So then, and you obviously went to university for the cybersecurity, right? For like the cyber stuff.
Yeah.
Do you feel like that was a waste because now what you're planning on doing in the future is just more of becoming like a day trader?
Oh, it's hard to say because the thing is,
Viper put you in trouble asking good question, you know. Just betting on,
I'm not the type of guy.
So Vinay, I'm going to put a counter question to Viper. So Viper, what do you do and why you are interested in trading?
No, I mean, I'm not the type of guy that would say that that will say that school is a waste. But you know, in my case, obviously, these 3 years, I they weren't. In the first place, I was interested into cybersecurity until I found out about the market. So from there, you know, it's still great knowledge, and I think that I might like, even though it wasn't cybersecurity, I learned some basics in coding, and I might actually want to study more about coding, because coding and trading, you know, you can do something with that when it comes to algo and programs and everything. So I could possibly do something interesting in the future with that. But yeah, I mean, I don't think it's a waste, because you know, I started into trading like a year and a half ago.
But you learned all of the stuff that you know now on your own, right? Like you did not go to someone, like you did research on yourself, you worked on yourself, and that's where you are today.
Yeah.
That's so cool. I give you props for that.
Yeah. Viper, just to add on to Cloudy, like you asked a question, right? So both are security and this market, both are, you know, equally challenging. Like even I do work in the same space, like cybersecurity and this trading. Both, when you compare, both are equally challenging, stressful.
Of course,
like, you know, cybersecurity also, the way you protect resources and intruders, all those things, you know, you do 24/7, you know, close watch scanners. Here also the same thing. I believe Cloudy has that kind of, you know, deep dive, you know, thinking. That's where he got into both hand in hand. So that's what I can add in my 2 cents here.
Yeah, that's true. Great answer.
Yeah, thank you.
No, I mean, obviously, like anytime at school, I wouldn't say it's a waste of time, even though, you know, because at the end of the day, you have a plan B, just in case. And were you asking this for yourself? Are you studying in something?
No, I'm somewhat, I'm only 16, so I'm kind of young, and I kind of want to, I'm trying to understand where I want to go in the future, because I'm, you know, I'm this is the point in time where I'm trying to like actually like think to myself of where I want to go in life and what I want to do and stuff like that. And stuff like this has me extremely interested. And I love business and I love finance. I love economics. I love everything that has to do with this basically. And it interests me a lot.
No, yeah, bro. I listen. You're talking like me a year ago. It's and when I started trading, I was actually in some the fun part. When I first started, it's a couple of my friends, like in real life. They knew someone that was into a group of penny stocks,
Yeah.
and the guy that he knew made thousands of dollars in some penny stock that blew up.
Hmm.
And that was back when the market was crazy, like
Yeah.
back in 2020, I think.
Hmm.
Um, and from there, I joined the group, but I didn't realize it was like a pump and dump the group.
Oh
And
yeah.
I lost so much. I lost like thousands of
Oh
dollars in
my
there.
God.
Like I would be up 50%, 100% on certain penny stocks, but I would hold because the fucking random guy was telling me that it was a long term and that I will do
Yeah.
10,000%.
Definitely like a scheme to like trick you.
Yeah.
Yeah.
So and one day I realized like and then I joined other servers with like alerts on options and everything. And one day I realized like these guys aren't smarter than me. I'm just
Exactly. Yeah.
they have just been studying. Like, to be honest, you don't need to be smart to trade the market. You just need to work to
Understand
put it.
yourself, because you have to have some type of self-reliance, because you can't always rely on others to do what you need to do for yourself, you know.
Oh, of course. Like if you want to be a trader on long term, you can't just be following someone. You need to learn the
Exactly. Yeah.
actual how to do it. And um, the reason why I'm saying you don't need to be smart is because it's all about screen time. Um, you know, you don't. I don't. You don't need to be smart. It's just obviously all you need is discipline, um, dedication. Because obviously you're gonna lose money when you start, and
Yeah,
this
of
is
course.
totally fine. But this is where discipline comes in. Um, and some people will get into market with they have the mindset where they want to learn how to trade properly,
Yep.
but they have the gambling mindset as well,
Exactly. Yep.
where they will lose $100 and then they will do another trade with the double of their position size,
And
sorry,
then lose everything.
to try and make back the losses. But in reality, that was just
Yeah, that's so
like the
stupid.
dumbest thing. Yeah.
Yep.
So
Exactly. Yeah, that's what I'm trying to learn now. I've made a couple of mistakes so far, and I'm like trying to correct myself. I've started. Well, as of now, I'm probably like a month and a half into learning. I
okay.
just started trading like 3 weeks ago, like every day, and I'm just trying to I'm trying to fix my mistakes and stay determined and stay on track, because sometimes and I know like people like us, we shouldn't be greedy either, because greed leads to losses, because you never want to, right? Am I right, like somewhat like that, like you don't want to be greedy
No,
because
no, no, no. Basically, when you enter a trade, whenever you should have a plan,
yeah, you should
and
have a, yeah, exactly, you should have a plan. Yeah.
and once you have your plan, you can't just be like, oh, you know what, it looks bullish. I'll
Yep,
just hold
exactly.
for a while. Like,
Yep.
no, no, no. You were supposed to sell at 20% profit. Just sell. I don't like. Who cares if it goes up 100%?
Yep,
Your
exactly.
target was 20%. That's it.
Yep.
You're out.
Yeah, and yeah, and like you just said right there, I a couple weeks ago I took I think it was like one of my first week, I took a call and I was up 50% and I sold because that was my plan. And then
Yeah,
maybe like I think it was like 3 hours later, I was up 200, it was up 220%, and I was like, God damn it, I should have hold. But that's the whole point, because who knows where it could have
yeah,
gone. So I was kind of beating myself up, but then at the same
yeah.
time I
But
was thinking like, oh my God, I'm okay.
yeah, I had the same thing when I started, and I watched. I can show you the video. It's a doctor. It's a doctor that's a day trader actually,
Mhm.
and he talks about FOMO, like fear of missing out, and the whole emotional part. And this really changed my whole mindset on trading. And there's also a couple of books about the the, um, the emotion of trading. Like there's trading in the zone, I think. I'm reading. I mean, I've been reading the daily daily coach, I think that's how
Mhm.
it's called. But trading in the zone is really recognized. There's a bunch of people that read it. It's really good. But yeah, I mean, I think the hardest part actually of trading is emotions and discipline.
Yep. Yeah, I think that's 100%. Yeah, because yeah.
Because let's be honest, these 200% plays, you're not gonna catch them unless, and
I have a
again,
plan. Yeah.
again, what you can do is that, let's say you have 10 contracts and you say, okay, so at my target, I'm going to sell 80% of my position. So in this
Yep.
case would be 8 contracts.
And then that
And
can
I'm
be
just
some
going to,
runners.
yeah, you keep these runners and you trail your stop loss. That's the thing you can do, obviously.
Yep. All right. I want to thank you so much for helping me out.
Of course, you can reach me in my DMs, to be honest.
Thank you so much. Thank you, Mr. Varmo. You are a big help too. All right.
Hey, thank you both actually. So really appreciate Cloudy. I liked your session today. So even I'm curious to know more details, like how you come up with supply, demand, and VCP. Even I am with you on that. Actually, recent past, even I stick to the same thing what you are doing. Even that is the top notch. Even definitely, I am with you on this today's session.
Cool. It's great to hear.
Thank you so much, Cloudy. And yeah, so as always, like every Tuesday, we have this space to discuss about one or the other topics and trying to cover some basics here. So, and let's see what we can do next week, and we'll come up with a plan, guys. Okay. Thank you so much for joining us.
Yeah, thank you. Appreciate you.
Yeah, thank you guys so much. Goodbye.
Have a good night.
Yeah, you too.